Good Sunday morning to you all. This is Sam the Trader Geek with your weekly review and preview Sunday, the November 2nd, 2025. Hope you're having a great weekend. And given that it's month end, take a look at some of the stats for the day, week, month, quarter, and since the beginning of the year. As you can see, this is Friday's performance, and Bitcoin was up about 3%, and so was the VIX. Max 7 on the backs of Amazon earnings and Apple earnings, which kind of faded, up 1.5%. Microcaps up 63 basis points, and midcaps up 61 basis points. Bonds were down a little bit. TLT, 20-year bond, down 30 basis points. And gold losing about 0.5% on Friday. For the week, we had the VIX up about 6.5%, Magnificent 7 on mixed earnings from the Mag 7. Meta went down, Google went up. Well, Google was last week. Amazon was up nicely. Apple was up and came back. And who am I missing this week? I can't think of them. Anyway, gold lost 2.5% on the week. Mid caps and microcaps losing about 1.5%. So did the bonds as yields went higher after the FOMC meeting. Small caps losing 1.25%, and Bitcoin losing about 0.75%. So kind of a mixed week. Qs were pretty strong, as evidenced by the Max 7, but DIA up 0.75%. Kind of a mixed bag, but for the most part, equities went up this week. If we look at the major markets for the month of October, which just concluded on Friday, the strongest performer was the VIX, up 7%, 7.1%, followed by the micro caps and the Qs up 4.75%. Oddly enough, both of the Mag 7 and QQQs, you can say 100% of the QQQ run was due to the Magnificent 7. Gold, despite the month-end weakness, was still up 3.5%. And the DIA 2.5%. Dollar gaining a little strength this month, with the SPY ending up 2.38%. At the bottom, Bitcoin not fulfilling its seasonal role in October. Was definitely not a October for Bitcoin. Mid caps, the only major equity that did not gain ground in October. So that's kind of weird. And to see everything else up and then the VIX up the highest for the month, just kind of unusual. Market as something that you would call things that make you go, Small caps up 1.75%. But long-term bonds, 20-year bonds up, still up 1%. Aggregate bonds not really doing much. So the month is the quarter. We can skip the quarters and go to year to date on all these major markets, with gold still the clubhouse leader, up 52.25%. Mag 7 up 24.88%, closely mirroring what's happening with the Qs. Microcaps up almost 20%, and the SPY is up 16.38%. Bitcoin still looking really good on the year. No slouch at 16%. At the bottom, dollar losing 4%. And the VIX, despite the S&P being up 16.38%, is also up 0.5% on the year. So kind of weird to see that, but strange things have been happening in the market. All the things that you would normally expect, seasonality and what have you, just have not made a whole lot of sense. But mostly green here. We'll take it. The only red was in the dollar, and that's probably boosting things. As for the sector performance on Friday, XLY, the consumer discretionary, basically, which is mostly Amazon and Tesla, was up on Amazon's earnings, 2.64%. Transport's up 1.2%, and telecommunications up 1%. At the bottom of the list, the defensive sectors, 0.69. Materials, XLB, not really a defensive sector, but really got hammered this week. And then staples, which has really been a laggard, losing 0.29%. And don't discount a mutual fund tax loss selling, tax loss harvesting, whatever you want to call it. that usually concludes by the end of October. It doesn't mean there's no more tax loss selling. There's other institutions and retail traders that will be waiting till November or December to sell, more likely the back half of December on these weak stocks. So I wouldn't be jumping into any of these big laggards just yet. XRT retail stocks down 0.2%. Let's take a look at the sectors on the weekly basis. Transports really up 2.5%. It's kind of surprising. XLK closely close to those at 2.42%. Telecommunications up 1.98%. And at the bottom, retailer stocks 4.43. The likes of Walmart and Target. Target giving up a good chunk of the gains it had on the bounce. XLRE, real estate, materials, staples, metals and mining, and utilities, all pretty much in the red. XLF and XLV, the financials and healthcare, down a little over 1%, with communications, which is mostly like Disney and Meta, offset a little bit by Google, down 64 basis points. We look at the month, which again is the sector, technology so far leading the way 6.68%, with the healthcare up 3.65%, bouncing a bit, which is the same as metals and mining. I would not have thought that, because the metals and mining have been so strong so far this year, and the strength in the healthcare sector has only been of late. Telecommunications and utilities up 2%. Bottom of the list, retailer stocks. What could that be signaling? And I'm not sure if XRT has Amazon in it, but I guess if it's in there, then it would have been a lot worse, but for Amazon's earning. XLB, again, 4.4%. These are materials, telecommunications, XLRE, real estate, financials, and consumer staples, all more than 2% in the red for October. Looking at sectors, nope, we don't need the quarters because that's the same thing. Let's look at them year to date. So XME, metals and mining, way ahead of everything else at 70%. And then you have XLK going at 29.31%. Third place is telecommunications. I gotta see what's in here to really see what's carrying the IYZ. And if we come over here and see IYZ, what is really helping this one, and what's in here? Roku didn't do too well on earnings, or maybe it bounced back, but Roku, ASTS, I guess, is in there. Verizon up 2%. These are all on Friday, but I'm just kind of taking a look. Comcast recovering, Charter. Yeah, I mean, LITE, light momentum. So I guess there's more than just telecommunications, like Cisco, and even ANET is in here. So there you have it. IYZ, telecommunications sector, coming back alive and helping the overall performance, given that breadth has been pretty pathetic this past week. You can see here, year to date, the only sector that's down is XLP, the staples, down 3%. Everything else is positive, with materials, retailer stocks, and XLRE, which is real estate. None of these are up 2%. XLE is the weakest of the ones, up 2% or more, up 2.8%. Crude just can't seem to get out of its own way. I'm going to skip over Mag 7%. I'm going to go to industries. Industries, on Friday, we had the cannabis stocks up about 4.2%. TAN was up 2.9%. That's the solar stocks. and GDX losing 1.15%, KWeb, the Chinese tech, and SMH. And these aren't necessarily industries, so they're just kind of subsets of some of the sectors out there. We lost a little bit of ground on Friday on the SMH, the chips. XBI on the weekly basis up 4%. Semiconductors up 3.38%, and then TAN solar up 2.12%. But we lost about 5.5% on cannabis, and home builders down 3.41. Blockchain stocks, a lot of the crypto stocks 3.17, and PEJ, which is the entertainment stocks, gaming and entertainment. No, that's gaming esports. PEJ, yeah, entertainment down 2%. So kind of a mixed bag, and you can see in a more pronounced basis the weakness in the breadth. And although you had a few sectors up, the major industries did not look as good. On a monthly basis and quarterly basis, solar stocks up 12.58, as were biotechs and semiconductor stocks. Robo being the robotics ETF up 6%, blockchain stocks up 3%. Worst here over the past month in October were the home builders down 6.37, cannabis stocks down 6.26%, and GDX finally giving up a little bit, 5.68%, but this has had a torrid run, and KWeb also down 4.9%. We look on a year-to-date basis, look at that performance in GDX, more than a double this year, so it's entitled to a little breather. And the next closest are the blockchain stocks, up 60%, and SMH semiconductors up 50%, as were the defense, not the defensive stocks, the defense stocks up almost 50% on the year. So no let up in the likes of RTX and LMT and other defense stocks, although Boeing's earnings weren't anything to write home about, and neither was the stock performance. TAN, solar stocks, KWeb up 36% despite the weakness in the last week and month. Biotech finally waking up 25% year to date. So that's helping support some of the healthcare stocks. Cyber stocks up 21%, and cannabis stocks, which had a really good summer, up 18% this year, finally getting out of consecutive losing years. FDN, basically internet stocks, and PEJ back to the entertainment. But ITB and XOP, those are the losers on the year. If we go back to the Mag 7s, we can see that Meta is down 12.1%. Microsoft is down 1% on the week. And Amazon on its earnings, eking out almost a 9% gain, with NVIDIA 8.71 and Google 8%. So three of the Mag 7 better than 8% gains, and then Tesla was up 5%, and Apple, which was up really nicely in the after hours, but as soon as they came in, they started selling it. I just don't get it, especially since the earnings were really outstanding. But then again, who doesn't own Apple? Microsoft losing about 1.1%. So all of the Mag 7 at this point have reported. So we've got those behind us. So I guess you could say it's downhill from here. Google on a monthly basis for the month of October up almost 16%. I mean, how many people had this one written off? Amazon up 11.2%. And then NVIDIA up 8.5%. Apple up 6%. The worst one was Meta. Again, they just love to stick it to Zuckerberg on earnings, but this one always seems to find a way to bounce back. Will it do it again? We shall see. But they're not liking the spending at Meta, and the constant switching of gears over there in terms of their priorities. Microsoft just basically flat on the month. So despite some nice performance, it was up, it was down, it went nowhere. Year to date, who's in the lead? Of course, it's NVIDIA, up 50 and almost 51%. But look, hot on the heels is Google, coming up 48%. Ask anyone at the beginning of the year how many thought Google would be up 50%. 10 months in or 9 months in, I doubt a whole lot of people would have said, yeah, for sure. Microsoft up 22, Tesla 13. Even Apple is still up 8% on the year, though. Again, maybe it's my personal bias, but I would think that just the cash generation machine at Apple, it would be a lot higher, but people love to hate on Apple, and I'm no Apple fanboy, believe me, although they get enough of my money. So up 8%. So all Mag 7s are up on the week. So enough of historical review. Let's take a look at where we are and where we're heading. So we're looking at a tri-pane of charts, like I always do every week. I'm a multi-time frame guy, top-down trading, daily, weekly, and monthly. So looking at the weekly chart, we've got the opening on Monday, a nice opening, nice gap up and holding it. Tuesday, we gapped up again, but couldn't quite hold it. Wednesday, we made a new high, and then Thursday, we came down, just about touched the 8 EMA, and then touched it again on Friday. MACD is solidly positive. We've got the relative strength index not overbought anymore, higher than the neutral level of 50, but somewhere in between. So more room to go. You can see here we've got good support here at the 6750 level if we want to come down there. And on the weekly, we formed yet another doji. We had one here. We had one here. So it's not, the gains aren't getting easier. And I gotta say that the trading wasn't that easy in October. I don't know what your experience has been, but a lot of stop outs and a lot of stops and starts, and a very much narrowing of the breadth and the stocks that were working. They'd be up one day, they'd sell them the next day. PayPal was up, gapped up really nicely, and they sold it down, and they sold it down until a little bounce on Friday. And they had great earnings. MACD on the weekly, pretty positive. We're at basically the warning track for the RSI at the 70 level, not quite there. On the monthly, we have 1, 2, 3, 4, 5, 6 positive months on the monthly charts. And we don't have a lot of history with 6 months up in a row, but maybe we've had this happen 5 times in X number of years, and 4 out of the 5 times this has happened, we've gone on to make a 7th month. So not a big sample set, but generally what you see is that when we go up 6 months, we generally get the 7th month. But again, that was only a sample size of 5. MACD solidly positive, still overbought on the monthly, and this usually can stay overbought for months. So here we stayed overbought from this was July of 2024, and we really didn't drop below the 70 level until January of 2025. So that was a solid 7 months where we stayed overbought. And right now, we started this in, again, July is where we got above the 70 level. And here we are going into into November, and we are still in the overbought. So again, this can stay overbought. It can bounce up and down above the overbought level. And that's what trending markets do. They get overbought and they stay overbought. So nothing bearish about these charts, except you're seeing a lot of chop here on the daily time frame, and you're also seeing a deterioration in breadth. Let's see if November seasonality can correct that. And October seasonality didn't work out to the downside. Will November seasonality to the upside work out? We shall see. Taking a flip to the NASDAQ. Again, on the daily time frame, we can see that again, we gapped up on Monday. Good Chinese tariff news, continued higher on Tuesday, Wednesday. We also went higher, made a new all-time high, but we had a bit of a hammer, so to speak. And then on Thursday, we took a little bit of a pullback, and Friday we gapped up and we pulled back in. So um, lots of reasons for this market to take a rest, but it just seemingly refuses to do so. But we are seeing cross currents on a daily basis, and gap ups that don't work and gap downs that don't have any follow through. MACD solidly positive. And we have, similar to the SPX, we have a relative strength at 64, which is pretty good, not overbought, not oversold. On the weekly chart, you have a bit of a topping tail coming into the end of the week. We made, again, there's that new all-time high we made on Wednesday. And we tried to get outside of the options implied expected move, but we're kind of thwarted in that effort. And MACD is positive. Now you can see here that the relative strength index, the RSI, is overbought at 72. So could use a breather here, but we haven't seen any, since October 6th, the week of October 6th, one-time framing continues. One-time frame meaning that no low of any one candle until the week of October 6th took out the low of the prior candle. And here we are resuming 3 weeks in a row. If we look at the monthly chart, solid MACD, overbought on the monthly time frame, and that usually stays overbought. And you can see here that you can count this as the seventh one. Let's see. So we closed at 19,278 in March, and then in April, 19,571. Yeah, so we had this little dipsy doodle and came all the way back, and we did close higher than prior months. So hence the green candle. Just kind of proving it to myself and you. 1, 2, 3, 4, 5, 6, 7 green candles. And does that portend an eighth one? We shall see, but I think that if the SPX is going to have another green candle, it's going to do it on the back of the NASDAQ and the tech stock, which is, carrying 30 to 35% of the SPX. So if technology remains positive, and like I said earlier, we have gotten through all of the earnings, so of the big ones. So we shall see whether now, based on those earnings report, we can carry the NASDAQ even higher in the weeks to come. Looking at the Russell 2000, not as bright and shiny as the other two. You can see that we had the gap up on Monday, but red candle, we opened up and closed down a little bit from the open. Tuesday, Wednesday, Thursday, Friday, even every day was kind of one time framing to the downside, meaning that we had lower lows on each one, but finally bouncing on Friday, and definitely not showing the strength the other two. Look at this MACD. You can see that the fast line is trapped under the signal line. We're definitely way above the zero line, so that's not bearish. But you can see that the relative strength is down here at 52, more at the neutral level than anything. So interest rates did not help this week, although the decline and the weakness in small caps started well before the FOMC meeting and announcement on Wednesday, when bonds started to show some degree of weakness. Weekly chart, MACD solidly positive. RSI middling. Not a pretty candle last week, but not quite your key reversal candle. This could be consolidation. Here we are. We haven't made much progress in, call it, what, 6 weeks? We hit this level here, and we've been trading there for about 6 weeks. So call it consolidation, call it chop, whatever you want. But so far, on a weekly time frame, this is doing its thing. Looking at the monthly, 1, 2, 3, 4, 5, 6. Although just wide and loose, sloppy trading in this one. Hitting a new all-time high in October, but not really closing close to the highs like we did with the other two indices. MACD is positive, and we still haven't been overbought. The last time we were overbought in the small caps, it takes you all the way back to August of 2021, when we kind of last visited the 70 level and have not been back there since. So again, interest rates is not helping, but to be quite honest, everybody keeps talking about how sensitive the small caps are to interest rates. But when interest rates were dropping sharply in September, we didn't see the small caps exactly screaming up. Although they did make a new all-time high in October. So there's that. Flipping gears a little bit, and as we talk about divergences and not momentum, but breadth divergences, taking a look at how the VIX is basically, what is it saying? And so you saw on Friday that the VIX got as high as 1854. We still not that much, but as the market was going up all week, look what the VIX was doing. So very weird stuff happening. So the VIX was going up as the market was going up. And usually when that happens, the VIX is trying to tell a story. We're still below the 200-day on the VIX. So unless we get two closes above the 200-day, I don't get concerned about it. But we have two closes above the 200-day. And then that warrants a little bit more caution and attention to some degree of weakness. But so far, MACD is not even threatening to flip up, although this could quickly happen. You can see here we did make a lower low on the VIX last week, but we couldn't quite, we never got below 15.5. And we did close at the 1744 level. So again, monthly, I don't care about that. But for the most part, the VIX is signaling that someone out there is hedging. And speaking of which, taking a look at the VVIX, I like to look at the volatility of the volatility. And when this is going up, they're buying those VIX calls. And you can see that this was going up, although I don't start to get concerned about this until we hit the 110 level. But once we're over 100, it merits a little bit of attention. But over 110 is where things start to get a bit serious in terms of downside. But for the most part, we're at the 104 level. That's not low, it's not high, but it has a bit of my attention. So going over to the VIX, like I like to do, we closed at about 17.5 on Friday. And if I go out, the next monthly expiration for the VIX is on 19 November 2025. Don't know why I put the year in there. And so do we have 18.5? Yes, we do. And again, I don't like these wide spreads here. I wish they would do something about it. Let me look at the next monthly expiration in December. So if we go to 18.5, still pretty wide, 287 to 380. But if we look at the 16 and a half, let's call it 63 cents versus $2, and let's call it 330. So definitely the VIX bulls or the market bears have the edge here as far as what VIX prices are portending, saying that they are bidding up the calls more so than the puts. And let me just go back to something that's expiring in 16 days, because we have a VIX contract expiring in 17 days, and 133 to 265. What is that? About $1.99 versus geez, these are wide, and 39. So definitely some VIX purchasing going on. And then finally, when I look at the VIX futures, if I can get it to come up here, the next VIX contract expires in 17 days. It's at 19 level. And if we go out further in time, the VIX contracts are how they should be in contango. Basically, the farther you go out, the more risk you would expect and the higher you would expect the VIX to be. And that's exactly the case. So this is a bullish configuration for the market in terms of the contango that the VIX normally is and is in for the coming expiration. So not a lot of concern expressed there, but if you take a look on Friday, let's see if they still have them up here. 410,000 VIX calls were traded, 205,000 puts, so 615,000. That's a lot, but not terribly high. But you look at the sizzle index, and you can see that on Friday, the put and buy, the buying of VIX options, excuse me, 5 times the normal. So they were grabbing something, calls at 5, and obviously the puts were a bit less. So it looks like there was some buying of VIX options on Friday. So take that for what it's worth. In any case, the last thing here I want to point out is the options implied expected move for the week ending November 7th. And last week we had about $109 move, $110 move. And this week we're looking at about 106 points. Now, we're supposed to have a jobs number on Friday, and if the government does not reopen, we probably won't see that. And the same goes for other economic reports, which I'm going to put up in a minute. But the fact that we're at 106 after the performance that we had last week, and if I go back to the major markets here on the week, you see everything that was up except the mid caps. You would think that the implied move would have shrunk, but the fact that it only went down by 3, and the fact that last week, we had the Mag 7 earnings, we had an FOMC meeting, and all of that entailed 112 points. This week we have none of that, and the likelihood of probably no major economic reports, maybe ADP and what have you, and we're still at 106. So that's kind of a caution sign in of itself, that that move did not shrink. And of course, going back here, neither did the VIX. So in fairness, so seeing that the VIX was up 7%, you could say I'm a little surprised that this didn't increase, actually. But again, lots of factors into this, but 106 points plus or minus. I'm a buyer of options in the short term, not a seller, and I think you should be too. A few things before I close this out and share with you. This is something from top-down charts that is interesting, and again, kind of reflecting what happens with the S&P 500 over the past 60 years. And here's November, and 69% of the Novembers are positive. And best November was up 11%. The worst one was down 11%. So um, just remember, 69% positive means there's a 31% chance that it's negative. So nothing is guaranteed. And when you think about it, 68.3% is one standard deviation. So we'll see. I don't know that has any correlation with the percent positive, but um, when you think of things in the 50-50, 50% chance up, 50% down, and you look at the expected moves, which happen within one standard deviation, I guess there's no correlation here with the positive 69%. Just happens to be close. What the heck? In any case, November is a positive month, but if you look at October, it's 59%, but solid months this far, and nowhere near the scary October that people were saying. So could we have borrowed in October from November? Possibly. All right. The other thing I was talking about is kind of the breadth here. And this is a chart from marketcharts.com. You've got the 200 SMA plotted on the S&P, but you can see the percentage of stocks that are above the 200-day moving average, under 60%. And the last time we had such distance from the 200-day was back somewhere here around 20. This is even worse, but at some point before we got the big decline, we were at 80% above, or almost 80% right here. Okay, 80% above the 200-day before we got a decline in here. We're at 60%. So you draw a line here, you can see the clear divergence in the S&P 500 in terms of stocks above the 200-day. So again, reinforcing that trading in October was not very easy. Taking a look at the economic reports, sorry, this is not very clear, but not finding very many out there. I wanted to fit this in a single page. You can try zooming in, but it's probably not that sharp. So a lot of these economic reports are contingent on the government reopening, but if it's not issued by the government, then we definitely will see those reports. But and if they're not issued from the government, like the PMI and ISM manufacturing and construction spending, you hear those. But come Friday, if we want the monthly jobs report, or on Thursday, our initial jobless claims, we're going to need the government to have been reopened to get those. But plenty of reports, and obviously it's not an FOMC week, so all the members of the FOMC will be out there yapping their heads off, and perhaps creating some volatility in the market. But you can see a lot of them are scheduled to talk. But Friday is key if we get the employment report and what have you, given that Powell said that December is not a lock. I have a feeling it is a lock, but we'll see what happens there. So we're getting through the heart of earnings seasons. Here are the big earnings releases, and of course, McDonald's sticks out right there in the middle. You can't miss the golden arches. Wendy's Friday, and we've got quite a few important earnings reports coming in this week. AMD on Tuesday after the close, Shopify before the open, Arista Networks, Pfizer, and every day. So we still have a cavalcade of earnings coming up this week of big companies reporting before things start to wind down for another earnings season, and they have been pretty good. So in any case, those are what I wanted to show you. And what I'm seeing here is there's Definitely reasons to be cautious at this point, even though seasonality is positive. Um, can the Mag 7 earnings and the positive seasonality overcome the breadth and divergences? We shall see, but um, there's enough reasons in the VIX to tell me that there is some hedging going on. And when I look out to December and are more like January, February, and March in the option pricing, they're definitely buying up puts in the indices to get ready for something. But again, that could mean the next 2 months are just fine. But the bulls have the advantage. There's no reason to get bearish. Sure, you can get hedged, and I am, and I know a lot of you are, but in this case, the market is bullish until indicating otherwise. And again, all the signs are that we could use a little bit of a rest, a little bit of consolidation, but and to kind of ease what are not really that overbought conditions, but ease a lot of these divergences, and we get the rest of the 493 participating. It's interesting if you take a look at the RSP, and let me just go with a monthly. Here we are at 187.88, and we first hit that level back in July this year, if I'm looking correctly here, 12/31. That was at 175. Um, there's August, July. So on the equal weighted S&P, we've made very little progress in say over three months or so. Anyway, hope you have a great trading week. I appreciate you watching and listening. Share this with your friends. TraderGeek on Twitter. Otherwise, enjoy the rest of your weekend, and I will see you back here next week, hopefully. Take care, and I'll talk to you soon. Bye-bye.